Good morning, everyone. How's it going? It is Tuesday, January 2nd, 2024. Happy New Year. Hope you guys are having an amazing start to your year. Um, I'm not feeling great. I'm a little sick, so I'll probably give this just a few minutes. I'm not going to spend too much time in the morning analysis. Mostly what we want to do today is watch and see what happens. So we've got traders coming back from vacation, especially the institutional traders. And if we try to get into the mindset of an institutional trader, we just had an amazing year. Right? If we were able to match or beat the S&P 500, we did great. We had big fat bonus checks, or we have big fat bonus checks coming to us, and we would want to try to start the year in as advantageously as possible. Try to have another repeat year. So what that would mean is any sign of weakness or any sign of pullback, you would just let it happen, and you would watch for that to pull back and then have some really great entries, since the markets have been really overbought over the last really month or almost 2 months. So let's see how we're opening up in the futures market, and we'll see what we can, just based on psychology, what we can sort of determine what might happen. Okay, so we can see that we are down in all the major indices. So this is pretty significant. This is 0.8, almost, yeah, about 0.8%. This is over 1%, and this is about 0.6, 0.7%. So we are definitely down. There is a downward bias in the markets today. It's unlikely that we'll be able to recover and go into the green, because we are down so much. And so from a professional trader's perspective, we would just let it happen. There might be some panic selling this morning, people who didn't expect it, who just ended a great year, and then all of a sudden we're down over 1% on the tech and discretionary stocks, and that's probably where most people had their allocations. So there could be a little bit of panic selling. Let's see where that brings us in the S&P. And so in the pre-market, it looks like it'll open below that EMA 8, above the EMA 20. So I wouldn't be surprised, especially in the early morning of the session or early hour of the session, we start heading down towards the EMA 20 as we get a little bit of panic selling. And then we'll see if that EMA 20 holds. We're pretty far from that EMA 20, so we may not even touch it today, but over the next couple of days, we may come and approach that EMA 20, and then we'll see if it holds. If all we do is touch the EMA 20, that's a pretty mild pullback. And then the upward movement that follows would be pretty limited. But it could get us to the all-time high or a little above the all-time high, but not way above the all-time high. If we pull back even further, say to the MA50 or somewhere in between the EMA 20 and MA50, then there's a lot more room to move upwards. Let's see if that looks the same way on the QQQ. I don't see where the pre-market is. Pre at 405.54, so right at this resistance right here. So it looks very similar to the S&P 500. Well, what we want to see is if it's being led by bonds. So a couple of things that we want to think about in 2024 is this interest rate movement, the fact that we've priced in 3 rate cuts in 2024, or actually the market is pricing in 6 rate cuts in 2024. If we look at the CME Fed Watch tool, and we're predicting based on the pricing of the bonds, it looks like we have a pretty strong probability being priced in that we're going to start cutting rates by March. If that doesn't happen, if we start getting signaling that, hey, actually we're not doing that, we're going to delay even further, then there's going to be a correction. So rather than a pullback, we would expect a deep correction. So that means maybe as much as 10% down before we start to see a bounce and recover for the rest of the year. But that would actually be really healthy for the markets, and will give us a lot of opportunities to enter into positions, especially if you're more of an investor. So you trade on a multi-month or multi-year time frame, that would be an excellent place to start loading up on stocks. If you're more of a swing trader, if you do options or shorter term options, then you would play both sides. You would play it on the way down and you would play it on the way up. So we just want to see how well or how far we pull back to before we start to see some support. And the TLT should help us get a gauge of that. So we can see that we ended near that EMA 8, and it looks the exact same as the S&P and the NASDAQ. We're set to open in between the EMA 8 and the EMA 20. The difference is that the bonds have that MA 200 right at the same level as the EMA 20 as well. So that could provide some strong support. So unless we pull through there, it looks like we'll more likely just have a pullback, maybe just pause at that EMA 20. And then if we start to expect that we're not going to have rate cuts, then it could fall through. So that'll be kind of dependent on the FOMC minutes. I think that's coming up. Let's see. FOMC minutes coming out tomorrow at 2 p.m. Eastern. So if we see in the FOMC minutes that they didn't even talk about cutting rates, then that could be a signal for the markets to start shifting away from the 69. Actually, there's another 10% right here. So almost 80% probability that rate hikes are going to happen in March. So if that starts to reduce and we start seeing this percentage creep up to 25, 30, 40, 50%, then that would be a likely place for the markets to start pulling back. And we'll see that correction early in the year. And that'll be great because that sets up for the rest of the year to be very bullish. So we'll just say this is all speculation. We don't know yet, but we are just identifying higher probability behavior inside the markets as we can see it right now. If that happens, if we get that pullback, then or that correction, then our focus is going to go into the small cap stocks. Once we get a very nice pullback or correction, focus on the small cap stocks because those have a lot of catching up to do with the large cap stocks, and there will be a lot of excellent opportunities over there. Okay, so in terms of today, this morning, well, when we open, we're not going to be too surprised if there's some panic selling. It's not necessarily going to happen. It might be if people still have a lot of cash on hand, they might take it as an opportunity to buy. But I have a feeling that most investors have already burned through all their cash. They've been buying in November, they've been buying in December, and there's probably not a lot of cash left on the table. So what we want to do is take profits. We've held through the new year or the end of the year. We've posted really great performance numbers at the end of the year, and now we're going to take profits and look for a better positioning or a better entry point to start hopefully repeating a performance in 2024. So the more likely move, at least for the institutions, is to offload some positions, see if we get a panic sell, and if we get a panic sell, then swoop in and start rebuilding our positions for 2024. So just watch out for that. We may get it's more likely that we get a sharp move down than we get a sharp move up, and then I'm probably bound by that EMA 20, wherever that is. So EMA 20 is at 467.80. Let's just put in a level right there. So this is the EMA 20. Okay, so don't be surprised if we start moving towards that EMA 20 today, and then maybe find some support, not necessarily at the EMA 20, we might find some support in between as well. All right, so that's going to be it for today. I hope you guys have a great, today might be a great time to take profits. If you have longs that have done well and you start to see the profit in them start to get eaten away, you could just take profits on them. And then of course, if you have the head in place or if you have some shorts in place, that's going to be really great news for those positions. So just take the morning. I personally would probably wait at least half an hour before I start closing positions. But that's going to be up to you. It's going to depend on how sharply this moves. when we open up. Yeah. All right, so that's it for today. I will see you guys in the aftermarket.